Good morning. Hope everybody had a fantastic weekend. Let's see where things are going to go here today. Always tricky in this market. It's range bound, and some markets got to the bottom of the range, like the Russell and the transports, which we'll take a look at, and they bounced from there. No surprise. Internals were lined up for that, so now we'll see how far it can get. So as prices went down as fast as they did, those of you in the room for a while or taking the courses, that creates a price void. Big wide range bars create price voids in smaller time frames, and that's what we're looking at. So I'm just starting with the cash S&P. And so the light gray lines are the overnight session, and you don't see too much here, if at all. It's just a dot, of course. But in any event, you can see the move down and this little congestion where prices overnight consolidated at. So the question is, and you get clearer patterns on the futures, can it get back up to the top of the range here where there's going to be pretty stiff resistance? That's the theory when we look at charts and look to the left and see support and resistance or price voids. So once it closes the void, there's going to be sellers up there, which is right up in this area here. And then you got the top of the range. And so where prices have just been bouncing back and forth, top of the range, bottom of the range, top of the range, close to the bottom of the range, and so on. And, so looking at what's happened over the course of the last 6 months or so, we just had this, just duplicate that, a little move back down to the next support level once this one broke. And that's typical of what happens. Part of what I didn't cover that too much in the chart of the week, but, that should be in your inbox. So read it. Some good stuff, simplifying, just looking to the left. So when one level breaks, typically prices go down to the next level where buyers are going to give it a shot again. And possible 0 times expiration. We'd have to look at that, Paul, and just see. Things are pretty far away. So just, the idea, I think, is probably remote. If we look at the S&Ps, we'll see whatever trading ranges there are. But as you know, the tighter you get, the worse the odds. So, we got range-bound markets everywhere. That's a fact. And as prices reach this resistance area up here, assuming that they can, there's going to be sellers up there. There's always the uncertainty. It's in the news right now. China talks again, uncertainty, blah, 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 and so it's just kind of, we've had enough of it, but I guess nothing we can do about it, but just deal with it. So with that being said, it doesn't seem like there's much reason for these markets to break out of these ranges here with that hanging over it. And so we had this pop, based on, things are so bad, that basically guarantees that the Fed's going to lower interest rates. And we've been there, done that already. How many times? So big deal. They're going to lower interest rates. Does that mean it's going to break out of this range? I don't think so. So it's day to day. We get a few days, maybe a week of rallies and then down and so on. So I wouldn't get too excited about anything big here, just based on the news that's floating around in the range-bound markets that we have. But that doesn't mean, as intraday traders, we don't find opportunities. And as we look at the futures, it looks like a pretty decent opportunity if prices can break out of the overnight range. So let's take a look at that. So here's the S&Ps, and you get the 24-hour trading. And so there was the gap down when markets opened up yesterday. I guess that's 6 o'clock or so Eastern time. And you had, buyers stepped up. Makes sense. You watch what happened on Friday and there was, buying right into the close. So that was bullish. So buyers didn't go away. And so now we got the consolidation at the top of the wide range bar. All right. That's our factory work, how we interpret what's happening. And the red bar down is a void. Well, gap down, big rally up creates a void too. And if you look at your 5-minute chart or 2-minute chart, you'll see that. So then buyers stepped up and created this support point down here, and then next wide range bar up. And so far, so good, where prices are holding up. Let's just drag that up there. Let's just put that in the middle of the bar, which now we've got minor support. prices are consolidating, and all of this leads us until something changes that this can go higher. And if it can take out Friday's high, well, then it goes higher up into the void. Now, what's happening right now is pretty common as to, wide range bar off a bottom to have an inside day today. Right. So while if it can take this out, it opens up the door to, a decent rally because of the void. But we should, until that happens, our expectation is that prices are going to chop around here. Prior day's high is resistance, prior bar's low is support. However, if it should by chance break below here, well, that opens up the door to going back down here, and down intraday is relatively significant. So we've got, going into today, basically a little trading range right there where prices are just chopping around, and that's our inside day. So unless they can clear here, probably the best thing to do is sit on your hands as far as trading the markets go. Individual stocks are another story, but here we're just covering the markets. You can take this analysis or type of analysis and apply it to anything. And so we'll see which way it goes. Qs, same story. Right. Built up that support. We've got the prior high being resistance. So far, it's an inside day. The congestion here is even closer, but as you can see, there is a small void and prices could rally intraday, which is something that as intraday traders, we could take advantage of if that should happen. But right now, we're just chopping sideways here, doing not much of anything. Weekly charts are sideways. And, I mentioned this in the video over the weekend that, look, this still has the looks of a head and shoulders top. We don't know which way it'll go. I shouldn't say a lot of times, but sometimes these things fail to break to the downside and they make significant moves higher. But, just based on what we've experienced over the last 6 or 7 months, kind of hard to imagine unless some magic news comes out, China and US or resolve things, or who knows what, that things could break out. But in any event, if they should start perking out of here, well, then we have to believe that long side is the best side, and we'll see how far it goes. The Dow, same darn story, right? Consolidating at that resistance to the left and that little sideways action there. If we can get above, rally mode, down below, maybe back down to Friday's low. The Russell, same story again. Similar patterns, not exact, but this was the weaker. This was the measured move. Right, a couple of weeks ago in the advisory letter, I wrote about, hey, if this doesn't hold, this is likely going to be a measured move to the downside. And that's what happened. So you had this strong move, and this was a normal pullback where buyers should step up again, and they certainly did. And you got the green bar, and then it couldn't go. And there was that trap last week on Tuesday on the ISM report. And I say trap because, and I covered this in detail in the advisory letter, how the patterns were set up to go higher. And as technical traders, we use patterns, and the patterns were confirming that institutions thought the markets were going to go higher. If you look at your intraday charts, you'll see the gap up. You'll see the first half hour hanging there with a green candle, which means it was above its open. And then the news came out and all hell broke loose to the downside and back down to support. The next economic report negative. And then it was like, okay, that bad news is actually good news because the Fed's going to lower interest rates, blah, blah, blah. Meanwhile, it's just in a big trading range here. And this does have the potential to move higher, the same as everything else. If it can clear Friday's high, and this has got a big void to the upside. So decent opportunity here because it's got the bigger void to rally up into that big bar. That doesn't mean it's going to the top of the range. It just means it's got a big void where it could rally up to at least the top of that bar before it hits any significant resistance. Oil, we all know about the news up here, and then it just totally failed. Buyers stepped up there, didn't work. So measured move down to the bottom of the range, buyers step up again. And, as difficult as it can be in trading on the technicals, it gets a whole lot easier when you remove the squiggly lines from the charts, the indicators and diagonal lines and all that stuff. And that was the theme of the chart of the week. So take a look at that. Because if you just look to the left and see how consistent that buyers and sellers are right there, it gets a whole lot easier to make decisions without having to process a bunch of what I consider useless information. So bouncing here, big, deep retracement, which makes it unlikely it's going back up to the top, but step by step. This is a nice move that's actually begun last week. And as it hits these resistance points, we just look to see what the reaction is. Bonds pulling back as they should be. I was kind of surprised that they didn't pull back a little further and actually held up on Friday while the markets rallied. But we're getting the turn here at this resistance to the left, and we'll see if it breaks through here. So this is something you can keep an eye on. And if you don't have the futures, you can look at TLT, or which is prices, or TBT, which is interest rates. And if this actually starts pulling back as it should, well, it's just it's in this trading range now, and you do have kind of slow there, that bottom tail to deal with. But TBT could possibly be a buy here if it can stabilize down in this area, which it's beginning to do. So something we'll keep an eye on to see what the bond market does, of course, what equities are going to do. And gold, kind of sloppy, but when things get sloppy in a smaller time frame, look at a higher time frame. See if it brings clarity. And it does. We know that this broke out of a long-term range over several years. Got a bottoming tail last week. It was that deep retracement. And now it's just dealing with this resistance here to the left where it fell from, normal. So maybe this needs another week or so of chopping around before it goes higher. So that's what we're looking to see, if these time frames, or when these time frames come to alignment with each other. So watching that. Silver, kind of the same story, a little more sloppy. But still, upward move, pulling back, needs to consolidate more. So we'll keep an eye on that as well. And I always like to look at the transports, which, actually, they peekabooed above this high and came up to, the other high there at the top of the range. And then unfortunately fell all the way back down. So the speed at which this went up from this point, look at the difference, how this kind of churned up and pulled back versus how this went up so fast. This was a much more bullish move. So I was thinking at the time, right, we're always thinking what if can happen here. If this happens, well, then it suggests something else. And what I was thinking at the time was, I don't know if I can drag this down here. No, I can't. Was if this could go sideways at this resistance, well, then it could break out, and then the markets could break out, and that didn't happen, right? The data came out last Tuesday, and which my reading of the charts, price institutions were thinking it was going to go higher, got blindsided, and prices went back down to the range. And now we start the whole process over again as to whether it can grind its way back to the top of the range, or does it stay, right? So if it could have stayed up here, bullish price action at resistance. If it stays down here and can't rally, bearish price action at support with his buyers, which then would lead us to think lower. And then we'd wait to see if it breaks. And if it does, down into the void it will go. And if the transports are going down, odds are the Dow is going to be going down, and the broader markets are going to be going down. So trading ranges, by definition, are pictures of uncertainty, consolidation. And so we wait for things to break out or break down. And until that happens, We can play the ends intraday. We can play whatever's setting up on the intraday patterns as explained. And that's the process. Right? And looking at multiple time frames. So that's it. All yours, Dan. Let's see where things go today.
All right. Thanks. Good morning, everyone. All right. Weekly options trader. We added some nice trades on the market bottom. Roku, we have a put spread, and I just typed to our swing folks that over these highs, I actually had this as a directional watch, and it's perking here pre-market. So now that's becoming one of my favorite gappers here. Let's see if it can, take out 5, 10, 15-minute high. SDC, we also added beautiful retest from an IPO, W pattern, 4 bottoming tails. It's gapping up here a little bit, so I tightened stop pre-market. Let me give that to you all in case you didn't get the adjustment via text. And so we have a directional and a put spread. Chop, put spread from last week, gapping down a little bit, but it's fine. Spiders, we have a put spread, and we covered half into strength right into the close at 50% of max gain. Tilray and put spread, it's still dogging it here. We're going to be talking about not bottoming patterns per se on Wednesday, but just how to get on board setups on any time frame. So we're calling it how do you determine where the turn is? And this one was not a great turn. It was a little climb-o here, but not as good a turn as we like. UNH, we have a put spread for this Friday, and finally Urban, the put spread just clicked us Friday right at Thursday's high, and he's now on probation using bar by bar analysis. I shouldn't have done that. Now let's go to the swing and options trader, AMT. We have a covered call, Delta Kilo, long stock, even though he's in a coma. Fitch, we're short stock, and I moved the stop to break even already in 1 day. S, we're long stock by being assigned our short puts. Beautiful reversal on Thursday on support, the 200, and that looks higher. IRT, long stock, beautiful close, that looks great. ITB, got a put spread, and we're 50% of max profit already, so I tightened the stop. Jabil core trade as a covered call. MJ marijuana, we have a put spread, and we'll just sit through it. It's the 2018s. Oscar Charlie, covered call. SRE, long stock. SITC, long stock. And finally, Whirlpool, put spread. So that's it. Everything looking fine. Let's look at gappers. Alex said XENT gap in a 15. Yeah, that's a bearish gap, but it's at support, so that to me would be an ideal 30-minute low. I just want to make sure buyers aren't going to step up. SEMO, that was a bullish close in and of itself. That's a bullish bottoming pattern. Target would have been 38 here, but now it's gapping up. 37, it's gapping up to, yeah, that looks higher. For a day trade, it's kind of eaten a lot of my potential targets. But day trade over 10, 15-minute high. 849, this is too sloppy for me. It's a bullish gap, but you got no quality price void, so you're gone. Netflix is in the news. Disney, the news said Disney yanked their advertising so that they're in a war. which is partially or fully, who the heck knows why it's been weak lately. You know, just other competitors coming after them. But look at these nasty declining 20 and 50. So that alone tells you be careful on taking counter trend moves. And I remember somebody asking me on this day, "Hey Dan, what about a put spread?" And we talked about this same thing. You're swimming upstream. If you did it, it better be short term, because I said I didn't trust that thing bottoming for very long. LVGO 1888. Okay, I like this one. That's a nice gap. I'm going to put that up here. Carl's asking about AYX put spread. Oh, why are my charts so slow? Intradays. Oh, McGraw, here I'm trying to see where it's opening. It's opening at 114. Yeah, short term again. I like Thursday's bar, but you got a lot of resistance to the left. Fizzler, some of the solar stocks perking here. This one's gapping up to 62.28. Wow, that's a deep retracement, but it's the resistance, so there's nothing to do. CSIQ. Oh, that's annoying. Has a bearish gap down. SPWR, I have on my list here. I posted that into our swing traders, saying it's a bullish gap from a CBS. I have it here in the middle window. So these are my three favorite gappers on the long side today. They're all in these three windows. Yeah, who knows? I noticed Uber perking here a little bit, but it's gapping in a downtrend. So could it be a bullish day trade? Sure, if it sets up. But my confidence for that being a long-term bottom, I got no idea. Remember this big gapper on Friday? Bullish close here. And it's hard to get a pattern there. You know, this below, it might take a week or another month or two or three, but it might be setting up for a core trade here. I like, you know, it's messy, but it's had a big move here. It's now in a trading range. The MAs are curling up here on the daily. Could be a breakout on the weekly. And then target would be, you know, 100 or so. MPC, not the same pattern, but it's holding better in the oil patch. Mitch, I think, got an upgrade in bears. Gapping up to 77.45. So where are you? It's gapping the resistance. There's no pattern there. EPAM, one of our subscribers, asked about a put spread on this, and I said, sure, if you can, you know, maybe the 177.50s and go through the rest of your work. Are you getting good premium, and are the spreads tight? The same subscriber asked about this, and I said, same answer. It's a total mess, but it's at, you know, all-time highs. McGraw, if we can get a 212.50, that looks great. Piton here, recent IPO. This is a perfect example. If we can get a double bottom, then we're going to bottom fish on that IPO. Like we did in SDC, we nailed that entry. Remember the Greg's Coffee Shop? We nailed the entry on this IPO, on this 123, the dead low. Wow, that was an explosive move off that bottom. So yeah, we'll trade IPOs. Just give me a pattern. So that's simple. So I'm done. Well, no, I got a few more gappers. Blue. Oh, I thought it was up, but it's a downtrend and it's a bio. That's the one Alex asked me about. XSW. That doesn't look like a real tick. I can't believe an ETF like that would be gapping up $4. McGraw asked me about FCX. It's a climactic McGraw on major support, but I don't have a potent reversal yet, and its relative weakness to the markets. The weekly, I have no turn whatsoever. So it's a watch, but I need more confidence on this turn right here. Again, Wednesday's class, the turn. Daku is holding well. Let's see if it can churn a few more days. And then McGraw put spread. XLE, I like XLE and XOP just for short-term swing trades. We got nice reversals on major support. I like Morgan and Goldman, reversals at support. I like Costco. Man, it's loud. Let me put my long watches in a window. I mean my letter trades. NVIDIA's on my list. Target, XLE, IYT put spread. RVLV is another IPO. I'm watching the bottom. And I have IWM as a put spread idea. So Costco over Friday's high I like as a put spread and a directional. Look at Roku coming in deep. SPWR, gap and go, but I don't chase things in the first 5 minutes. LVGO. Let's let it set up. All right, poor Roku. It's not, it's not, look, it went all the way up to 110. But let's see where our put spread is. I might have to tighten the stop for the weekly. We're short the $10 wide, 98.88. It's probably going to be spready here at the open. No, not as bad as I thought. At the midpoint is 74, and we sold it for $1.04, so we're 25% to max gain. I'll just leave it for a few minutes. McGraw, copper turned up, FCX follow. Yeah, so if it closed like this, hey Debbie, if it closed like this, then I had more confidence over Friday's high.